Are you a California senior who feels, well, trapped? You've lived in your home for decades. You paid your dues and you're sitting on a fantastically low property tax rate you locked in years ago thanks to Prop 13. But now that blessing is starting to feel like a curse. Maybe the house is too big, the stairs have become your arch nemesis, or your kids and your grandkids have moved clear across the state. You'd love to move, to find a home that fits this next chapter, but you're terrified that selling your home and buying a new one will send your property tax bill into the stratosphere. It feels like you're wearing a pair of golden handcuffs, stuck in a place by the very tax benefit you worked so hard to earn. And here's what most people don't realize. There's actually a tax law that can set you free from those golden handcuffs, and it could save you thousands every single year. By the end of this video, you'll know exactly how Prop 19 lets you move freely, keep your low property tax base, and finally choose a home that truly fits this stage of your life. Before we dive in, a quick but important note. This video is for general information purposes only. It's not legal or tax advice. Always consult a qualified attorney or CPA for your specific situation. And just so you know who's guiding you through this, I'm Tricia Garcia, a certified senior real estate specialist. I work every day with California seniors and their families to plan a smooth, stress-free move. Whether that means downsizing, relocating closer to loved ones, or understanding the financial impacts of Prop 19. So you're in good hands. To really appreciate how transformative Prop 19 is, let's look back at what came before it. For decades, transferring your property tax base was limited by Proposition 60 and 90, and they were loaded with restrictions. First, you could only transfer your tax base once in your lifetime. That meant there was incredible pressure to make the perfect move because there were no do-overs. And second, you were geographically boxed in. Prop 60 allowed transfers only within the same county, but Prop 19 opened the doors a bit, only if the new county agreed to participate, and many did not. So if you wanted to move from Los Angeles to be near a family in a non-participating county, you were simply out of luck. And then third, there was a value cap. You could only transfer a home of equal or lesser value than the one you sold. If you found a smaller but newer or better located home that cost even a little bit more, you were hit with a full reassessment. So those three limits, the one-time use, the county restrictions, and the equal value rule, trapped thousands of seniors. Stay in a house that doesn't work anymore or face a massive tax hike. So that was the old system, limited, rigid, and unfair. Now let's talk about how Prop 19 completely flipped the script and gave seniors true freedom. Prop 19, which took effect on April 1st, 2021, brought flexibility, simplicity, and opportunity for Californians 55 and older. Here are the three big breakthroughs. First, you can now move anywhere in California, from the mountains to the coast. It doesn't matter which of the 58 counties you move between. You can take your low tax base with you. Second, you can transfer your tax base up to 3 times in your lifetime. That takes away the pressure of making one final move. If life changes, you can move again and again with confidence. And third, you can buy a replacement home of any value, even if it's higher. If the new home costs more, you'll just pay taxes on the difference in value, not the whole amount. That's real freedom. To qualify, either you or your spouse must be 55 or older. The home you sell must be your primary residence, and the new home must become your new primary. You have a 2-year window between selling and buying, and it doesn't matter which happens first, giving you some options. That's the foundation of Prop 19. But what does it look like in real dollars? Okay, let's break this down with an example. Meet John and Mary. They bought their Orange County home in 1985 for $200,000. Thanks to Prop 13, their taxable value today is $300,000, and their annual property taxes are about $3,300. Today, that home is worth $1.5 million, and they're now ready to downsize. So we're going to look at two different scenarios. Let's look at the first scenario, which would be buying a less expensive home. They sell their $1.5 million home in Orange County, and then they buy a new home for $1.2 million. Because the new home's value is lower, they transfer their full tax base, still $300,000, keeping their tax bill around $3,300 a year instead of $13,000. Scenario number two, if they buy a more expensive home. They sell their Orange County home for $1.5 million and buy for $1.7 million. Under Prop 19's blended assessment, they keep their old base and add on only the $200,000 difference. New assessed value is $500,000, roughly $5,500 a year in taxes instead of $18,700. If they buy within a year, they can even go up to 105% of the old home's value before paying extra. 110% if within 2 years. That's tens of thousands of dollars in lifetime savings. So far, so good for seniors. But Prop 19 also changed the rules for inherited property. And this part caught many families by surprise. Before Prop 19, parents could pass their primary home and up to $1 million in other property to their children or their grandchildren without reassessment. The kids could rent it out, they could use it as a second home, or they can keep it as a legacy. Now, the rules are much stricter. For a child to inherit your low property tax base, two things must happen. First, the property must have been your primary residence. And then second, the child must move in and make it their primary residence within 1 year. If they don't do this, the property is reassessed at full market value, often resulting in a huge tax increase that forces a sale. There's also a $1 million cap above the original taxable value adjusted for inflation. Anything beyond that gets partially reassessed. This change has major estate planning consequences. So it's essential to discuss Prop 19 with a professional before passing down property. Okay, so how do you actually claim your Prop 19 benefit once you made a move? Let's go over that next. After selling your original home and buying your new one, you'll need to file a claim with the county assessor in the county where your new home is located. The form is called BOE 19B, Claim for Transfer of Base Year Value to Replacement Primary Residence for persons at least age 55 years. Yes, that's a mouthful, and I will put the link down in the description for you. You generally have 3 years from the date you buy to file, but do it right away. If you're late, the relief only applies moving forward, no retroactive refunds. And remember, your sale and purchase must happen within 2 years of each other. I know, this can feel like a lot to navigate between timing your sale, finding your next home, and filing everything correctly. It can get overwhelming really fast. That's where having an experienced guide makes all the difference. As a certified senior real estate specialist, I've helped dozens of California seniors successfully use Prop 19 to downsize, relocate, and keep their low tax base. We coordinate the sale, the purchase, and filing process step by step so you can move forward with confidence and peace of mind. If you're thinking about moving and want a clear strategy for your unique situation, our team is here to help. Just click the link in the description below to schedule a free, no pressure consultation to talk about your goals. If this video was helpful, share it with somebody who needs to hear this. Maybe it's your parents, maybe it's a friend. Either way, just pass it along. For decades, countless California seniors felt house rich and cash poor, stuck in homes that no longer fit their lives because they feared a massive tax hike. Proposition 19 is the solution. It ensures you're not penalized for wanting to live in the right home for your retirement. Now, you have the freedom to move closer to family, downsize into something more manageable, or finally buy that dream home in a new town without losing the tax benefits you rightfully earned. You're no longer trapped. You are free to move.